it's not just about Bitcoin, Mark. It's about the credit system that's the backdrop for our world. And that credit system it dies if it can't continue to expand.
Because we're in a debt-based monetary system.
That's correct. And in a debt-based monetary system, the increase year over year in debt is necessary for the survival. And the banks that are controlling this credit system have instituted a political and economic system around them, including government regulation, central banks, and international trade agreements that allow for these banks to receive a bailout or to receive the support from the people, actually extract the people's present and future earnings and tax revenue for the benefit of this system, all in the name of that system provides jobs for the world. And so they use the scare tactic of contraction to avoid it. So because we live in that system, it's contracted and expanded so many times that the leverage is so large in the system that what you get during these times of volatility are, my mentor taught it to me in these words. He goes, a 7 sigma event is something that's only supposed to happen one every 1,000 years. We're getting 7 sigma events every 7 years, and they're getting even closer to each other. So what does it mean? It means that the perceived normal distribution of returns doesn't exist. Returns are not normally distributed, neither are volatility events. Volatility events that are supposed to happen once every 1,000 years are happening every few years. So statistically, it's supposed to be impossible. However, we're experiencing it. And I believe the volatility events that are happening so often are simply a symptom of our credit system being so based on a lot of thin air, basically.
Right.
Yeah.
The leverage in the system magnifies the volatility.
That's right.
Right. It's like if I had 4 or 5 books in my hand, I could balance it. If I have 400 or 500 books, the thing is swinging wildly.
Yeah, and if we think about the volatility and the expected returns, all of these portfolios are built on models. And so when the expected volatility spikes like that, the AI, which runs a lot of these portfolios, it doesn't know what to do.
Right.
And it literally errors out and force sells. So that's actually what you're witnessing. It's a computerization. It's an algorithmic dominance of financial markets. All of these are components that lead to these large moves, but it doesn't. I think you need to understand that that is part of the market structure, as opposed to take each volatility event as something that should be taken uniquely, meaning that in the pandemic, what you had is the largest contraction ever in GDP, the largest contraction ever in GDP, and the quickest expansion from monetary and fiscal that you ever saw. That's just another example of what I'm talking about, is that when it contracts, you have to expand it. So that was another magnified one. We're just experiencing these now more and more.
Yeah. So let's get back to the plan, you said. So we're sort of in Trump's world. We have to know what Trump's plan is. You're paying attention to all these words that are being said so you can understand that. Let's look at from a historical basis for a minute, right? Because we were kind of talking about earlier where like a lot of people are saying like, Trump shouldn't do this. He doesn't have the right to do this. Who is he to crash the markets, these types of things. But presidents do these things. And so we can look back just to a couple, so like the Bretton Woods Agreement, the Plaza Accord, and in 1985. And what's interesting about those is it sort of seems like they were trying to fix the same problem, which is trade imbalances. Right? So that's what I think 1944 was about. I think that's what the Plaza Accords were about. So you sort of have this free market. The world realigned and pegged back to the dollar in 1944, and then the imbalances grew. 1985, we had to kind of bring it back in, and then today we're talking about trade imbalances again.
What the president's chief economic advisor has said, we are living in this world where the Chinese exporting has hollowed out U.S. manufacturing, it seems very cliche to talk about it because that's a theme that's been with us for quite some time, a few decades. But now they're ready to address it. It also seems cliche to say that a strong economy has to have strong manufacturing when the U.S., which is the world's largest economy, has hollowed out manufacturing. So people, they're unable to see necessarily that we need the manufacturing back to survive on the long term, because in the short term, all of these technology services that we provide as a nation are consumed by everyone across the world. So it is keeping our economy going. Right? The whole IT sector and technology sector, even social media, when you think about where are all the social media companies based and where have they come from, all the strong internet companies over the last few decades, they're all United States based.
Yeah.
So why do we need manufacturing? They are saying that, yes, we do need it, and it is to address this permanent trade deficit that we are in. It creates a permanent capital account surplus, and that's one of the keys. If you have this huge capital account surplus, it means that the rest of the world is holding your debt, and that makes you subject to them also in a way. So all of these things are trying to be addressed here.
Do you think, I want to get to the manufacturing back, but let's just talk about the trade imbalances for a minute, right? Because Trump's talked about trying to close those trade imbalances, and obviously talked about the tariffs for each nation that we have that. And some of them look ridiculous, like the trade imbalance maybe with Vietnam, for example, right? But it doesn't include, to the point that you just made, right? That's like, what are we exporting to Vietnam? Like, what can they buy of ours? But it doesn't seem to include what we really export, which you said are the tech sector. So we've grown our way from making textiles like 100 years ago, and we've moved to higher level things. So now we produce science, medicine, technology, and we export the technology, and so they receive that technology, but that doesn't show up in those trade balances.
Well, and that's what they're trying to address with tariffs, is they're trying to make them pay for some of those things coming in so that there's more of a balance. They're also trying to make sure that, what they're trying to do with their protective tariffs, like in Vietnam, if they have protective tariffs, they are preventing U.S. goods from coming in. Those technology products are taxed double so that they might go and get them from China, for example. Those are some of the things that are trying to be addressed in terms of exporting to a country like Vietnam. But what they've said, part of this dual public good that the United States provides to the world, one of them is defense, the other is U.S. dollars and U.S. Treasuries. The defense side seems to be something that they want to make sure the trade deficit is closed with the rest of the world, because if you simply buy more U.S. weaponry, that will shrink the trade deficit. And what you're doing is that you're doing a couple things at the same time. You're lowering the amount of money that you have to spend as the United States on protecting the world, because your ally is now going to build up their army, but not opposed to you, but in alliance with you. So that foreign country buys weapons from the United States. That gives us, a balance of trade in our favor. And if we're buying things from them, it is more balanced if they're buying weapons from us. So that does seem to be part of the agenda. So I expect a big boost to the demand for the U.S. military-industrial complex.
Yeah. Well, I mean, that's part of that was my kind of thesis of this Amazon Prime, which is what Trump has been saying, how with NATO, each country is supposed to pay a percentage of GDP towards security. That was the agreement, but they haven't done that. So what you're saying is the big push is him to do that. So if these countries were to take 2%, 4% of their GDP back towards military, that could help offset that trade imbalance.
Yeah, and we've been talking here about China. We've been talking about Vietnam. Before we started, we were talking about the potential for a deal with India, and how is it going to look with Russia, with the United States? Are we going to go into more of an alliance with them and try to pull them away from China? Europe is an entirely different theater of this reordering. And, to talk about Europe and the role of NATO and all that, it starts to be a different conversation than what we're talking about with China hollowing out the U.S. manufacturing or trying to find ways to get non-China and non-Europe countries to pay more of their fair share.
Right. We were talking about how when you start connecting a lot of dots, you can see that one of the things Trump did when he first came in was he threatened the BRICS. So there's tons of videos I've talked about. It's been all over the BRICS, their own currency, a gold-backed currency, their growing power, et cetera, et cetera. And he sort of warned the BRICS, hey, if you try to launch your own currency, 100% tariffs against you, anyone who moves away from the dollar. And so the BRICS is this coalition, this trading bloc. And the C in BRICS is China, which is the big one. So in one way, you can see that was one of his focal points. And it seems like part of what he's trying to do then is sort of reorg. Maybe the U.S. doesn't have enough power against China necessarily, but if we could pull some of that trading block away from China, then the U.S. could have more power there.
And, you can't dismiss what he's saying. You have to listen to it because it's fascinating to see the speed at which some of these things are now happening. But listening to one of your recent episodes talk about BRICS, what I realized that he's actually trying to kill BRICS in that he's trying to take the C, China, and isolate China. And to do that, you have to bring Brazil, Russia, India, and South Africa, and the others like the United Arab Emirates, who has already announced over $1 trillion investment in the United States. That is maybe the big play here. It's the thesis for the last few years was, can a BRICS alliance rise up as a trading bloc and threaten the US dollar realm by using their own swap lines? Now, maybe BRICS he's just trying to end that alliance in one swift move and isolating China. And that's what we saw with the 90-day pause, is that
exactly.
You go 50% even more on China and you pause everyone else. But why? Because 75 countries called them. And they're not making that up.
Yeah.
We have the bilateral confirmation. I don't know if 75, they always love to exaggerate, but it doesn't matter. The calls came in, the deals are already penciled in, the meetings are being set, all of those tariffs are coming down. Maybe, and so that's part of, your 4D chess. There's so much going on, and we just have to do our best. Yes, I teach at USC, but unless you're a student, and I know you're reading history left and right, Mark, every day, unless you're a student, you won't be able to keep up.
Yeah, because the history is what gives you the perspective. So again, back to 1944 or 85, where the world did come together and did agree to repeg back to the dollar and did agree to reset the trade imbalances and did agree to allow the U.S. to devalue its currency, right, each of those times. And so then you start to go, well, I guess every couple decades we just do this thing. Whatever, we just do it again, right? And you get that perspective. I think, when the BRICS started, it made sense, a little small trading bloc, whatever. But now China is big enough to rival the U.S., and I think then it sort of is like danger. We have to kind of do that. I think also the global supply, or I should say the global pandemic and supply chains breaking down really put the world on notice as to, especially in the United States, like, shoot, we couldn't even go to war with China. We don't even have medicine. And I think the Ukraine war even put that more on blast, where NATO couldn't even produce enough ammunition to keep up with Russia. And so I think it's important to think about that. Back to Europe, for example, I think it was interesting where von der Leyen from the EU was like, we'll retaliate against the US. But then like Maloney from Italy is like, I'm going to come over and talk to you. And, Germany might need the U.S. to buy its BMWs and Audis and Volkswagens. And you start thinking about then, well, the EU wants to play, hardball, but then what about Germany and what about, Italy and like the implications of potentially breaking apart the EU. So seems like there's some big moves being made. And we don't know, obviously. The world, this is a complex system and unintended consequences will prevail, but it seems somewhat likely to work out. What do you think?
I've been watching the, politics in the EU to the best of my ability. And my opinion is that if you are to see some grand reordering within Europe because of this idea that Trump is looking for more alliances, and the EU as a bloc doesn't appear to be allied with the United States in this effort. A lot of the agendas are opposed to each other. That Italy will be the one that leads its way out and can establish, a bilateral relationship with the United States that protects Italy in its effort to leave. Now, I'm not making the prediction, but that's the way I'm thinking about it, Mark. So I'm looking at Italy and I'm watching their politics because it's the only country that is showing any hint of it. And so that's the one that we have to watch.